interest rates might be on the rise. Inflation rate rose to about 2.4%, $2 a liter in terms of gas prices, higher food prices. The stock market reaching new highs. Welcome, everyone, to another edition of Between Dollars and Dreams, News You Could Use. As you can see, I'm all by myself. David has flown away to beautiful Mexico on R&R. Well-deserved, David. So now I'm flying solo to deliver the news you could use for this particular week. So bear with me. I don't have my trusted sidekick, but he will be back, hopefully, quite very soon. So one of the things that we've seen recently is the new introduction of Canada's sovereign fund called the Canada Strong Fund by Mark Carney. So what is that? So that is, think of it almost like a pension fund that the government's going to invest about $25 billion over time. And they're just going to buy, just think of it like buying, stocks in various companies. So they're going to make some bets in various industries. The good things about for us as individuals is that normally with these big sovereign funds like the Saudi government has, like other countries have, or like pension funds in general, the average Canadian doesn't get invited to the dance or not able to invest in those type of private enterprise. So think about it. Private enterprises or various types of funds, pension funds, bought the 407 from the government's hands many, many eons ago. And you could see how much money the 407 gets to make on an annual basis. So now with this sovereign fund, we have access to kind of private equity that normally we don't get access to. So that's a good thing. But again, the devil's in the detail. It's still in the preliminary stages. So we may be able to access investments that normally we don't get to access. So always on the positive side here at TF Team. Second, we saw the Bank of Canada held the rate steady, 2.25, and they really didn't have much leeway because of what's going on in the world with the war, with the oil prices, with the cost of, inflation also rising. So they kept it steady at 2.25. So what does that mean to us? Well, it looks like interest rates might be on the rise in the future, even though they kind of held it steady. So if you're thinking of buying a house or renewing your mortgage, which a good chunk of Canadians are renewing their mortgages right now, now's the time to take the plunge because interest rates might be on the rise in the second half of the year should the war continue and oil prices continue. So if you're thinking about it, house prices are still fairly low compared to, COVID or pre-COVID era. So now's the time to maybe pull the trigger. We've talked about also inflation. We saw inflation rate rose to about 2.4%. I mean, you don't have to tell me when you do your groceries, when you gas up, we're seeing those prices going up on an ongoing basis. So hopefully this is all to do with what's going on in the world with oil prices and the war. So hopefully once that is settled, we should get back to stable inflation because we had it under control prior to the war, and now it's kind of creeping up. So for you and I, what we have to be cognizant of is that we're probably in the midst of maybe $2 a liter in terms of gas prices if the Strait of Hormuz is not remedied fairly quickly. So what does $2 a liter gas prices means to us? Higher food prices, higher anything, because all of our goods and services and food comes in a truck or by ship. And they take a lot of diesel fuel to bring it to us. So we're going to see, at least in the short term, higher prices. So put some money aside just in case. We always talked about that emergency fund to always have that kind of available. So trying to leave you on something positive because it kind of sounds like a bit of negativity. Well, the positive is on the investment side, right? The stock market, all of them, in North America are reaching new highs. NASDAQ and the TSX is, depending on when this is recorded or when this is viewed, it's been up about 7% this year. So if you panicked early and got out because you didn't have a plan, you didn't have an advisor to kind of guide you through the bumps of the market, you would have missed out on this particular increase. So we're poised to do again double digit return, but again, it's not a straight line upwards. So if you don't have a plan, please connect with your advisor. And if you don't have an advisor, please feel free to connect with us at the TF team, and we'll be more than happy to customize a plan for you. So hopefully you've enjoyed the solo act of news you could use. Please like and subscribe to the TF Team podcast, and hope to see you soon. And hopefully on my left next time will be David, all tanned up from his trip from Mexico. Bye and have a great day.